Hi guys, I'm Nick Brocheta, FXDoctor. Today we'll talk about indicators. Indicators are mathematical tools calculated based on past price data. They are usually displayed below the main price chart, and multiple indicators can be used in the same time. Indicators help traders make informed decisions by providing insights into price momentum, trend, volatility, and more. However, they are not magical formulas. Traders should not rely solely on indicators when making buy or sell decisions. This is the main thing. Indicators are, let's say, maybe 20% of you have a trading idea, you have your setup, and you want to, let's say, buy gold or something like that. You use indicator just confirmation of your idea. Do not trade. Some people trade on, I don't know, moving average, when moving average cross or something like that. But it is only maybe 20% of, you cannot trade based upon that. Okay, let's go further. Just a second. A technical indicator is a mathematical calculation based on historical price, volume, or open interest data used to analyze market behavior and assist traders in making informed decisions. They are calculated based on historical price data. However, indicate, okay, we told that already. Okay. Some of the most frequently used indicators include the moving average, MA, relative strength index, RSI, MACD, stochastic oscillator. These indicators are widely used in both forex and stocks trading, helping traders identify trends, momentum, overbought, oversold conditions, and potential reversals. Moving average. It is the basic indicator. Moving average MA is one of the most fundamental trend indicators in technical analysis. There are several ways to calculate the moving average, each with its own characteristics and use cases. The most commonly used types of moving averages are simple moving average, exponential moving average, and weighted moving average. Each version responds differently to price changes and can be used depending on your trading strategy. Okay, this is how they are calculated, but you don't want to know that. Doesn't matter. We will read this. I will read this. Simple moving average calculates the average of prices over a set of period, giving equal weight to each data point. It reacts slowly to recent price changes. Exponential moving average gives more weight to recent prices, making it more responsive to current market conditions, preferred for short-term trading and momentum strategies, and the weighted moving average assign linearly decreasing weights to older prices. It reacts faster than SMA but less than EMA, offering a balance between smoothness and sensitivity. Okay, this is, for example, simple moving average 9 and 21. And you see, when they cross each other, the price is the trend is changing, as you can see. On each cross, trend is changing. This is 50 simple moving average 50 and simple moving average 100. Okay. There is a lot of strategies based on crossing moving averages, but we will talk about that in advanced course. This is basic course, and after that we will talk about Elliott waves. We will talk about Fibonacci. We will talk about Japanese candlestick charts, and after that I will make one advanced course. It will be for free too. Okay. RSI, it is my favorite indicator. Relative Strength Index, RSI is one of the most commonly used indicators in currency trading. It is a momentum oscillator that measures the speed and change of price movements. RSI value ranges from 0 to 100, minimum value is 0, maximum value is 100. Traders use RSI to identify overbought and oversold conditions, helping them spot potential reversals or corrections in price. Okay. RSI is always calculated over a specific time period, most commonly 14 periods. RSI is calculated, okay, this is a formula. This formula converts price strength into a value between 0 and 100, allowing traders to access the momentum and strength of trend. Average gain is calculated by taking the sum of all closing prices increases above the average during a specific period and dividing it by the number of periods. Okay, you can read this. Doesn't matter what is important. That is, when the RSI rises above 70, the market is considered to be overbought. The conditions suggest that the uptrend may be nearing exhaustion and a potential reversal to the downside could occur. When the RSI falls below 30, the market is considered to be oversold. This indicates that the downtrend may be losing momentum and a potential upward reversal could be ahead. These levels help traders identify potential entry and exit points based on momentum extremes. Okay, as you can see here, RSI under 30, we go up. RSI overbought, we go down. RSI oversold, we go up. RSI overbought, we go down. RSI overbought, we go down. Oversold, we go up. I often use this RSI indicator, as you can see on my trading window. Oh, I closed with this position with profit, very nice. Just a second to check. Okay, yes. Okay. History. Yes, take profit. I took $108 from yesterday, $474.90. You saw that I opened this account yesterday. It is a funded prop FTMO account with $100,000, and this is first verification. I have to make 10% on. I have to make $10,000, and I will make it with you. We will watch it. That's it. After that, I have one more verification, and after that, I get the account with $100,000 demo, and they're telling me that money I make every month, they will pay on my transfer on my account, but 80% of it. I hope that it is not a lie. We will see, but I think that it is they on the internet. I was investigating them. I was reading about them. People are saying that they're okay. They pay the money. They transfer the money. It is okay. Let's go further. Okay, just a second. Okay. Yes, I wanted to show you. Sorry, I wanted to show you this. Yes, that I use RSI in my trading. As you can see, you see, and this trade was also confirmed by RSI. As you can see, it is some kind of channel. I deleted all the lines and everything FIBO from the chart, but as you can see, if we connect these highs and connect the lows, it can be some channel and up. Now I have three confirmations. I have Elliott wave confirmation. We will talk about that. I have Fibonacci confirmation, Fibonacci retracement confirmation, and I have RSI confirmation that this here is a good place to good spot to place a buy order. Sorry about my English. Uh, yes, sorry about my English and sorry about my I don't have this buy sell graphics on my videos. I'm just old guy trader from I'm trading almost 20 23 20, 24 years. I'm licensed stockbroker here in Serbia and portfolio manager, and I trade forex since 2003. But I don't know how to make these fancy videos or fancy clips or something like that, and I don't know how to do that. But I very well know how to trade. And as you can see, everything I post everything live and free, and that's it. Okay, let's go further. On the chart, the RSI indicator is displayed below the main price chart. As you can see, RSI helps filter out false signals that might appear when looking only at price action. For example, if the price forms a higher high, yes, this is very important. If the price forms a higher high, but the RSI forms a lower high, this is considered as a false stop. This condition is known as negative divergence and often signals a potential trend reversal to the downside. What this means? This is Pfizer. I was talking about Pfizer stocks. I bought 200 yesterday, 25 on Friday. I bought options on options, Pfizer options too. You can see in my previous videos. But what is important here? As you can see, price is falling down and price is making lower low, and the RSI is making higher low, as you can see. It means that RSI is a relative strength index. It shows strength of buyers and sellers. In this case, we can say if the RSI is below 30, that this stock is oversold. But what is happening here? Price is going down, 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 and RSI is making higher low. That means that sellers don't have strength to do this, and the price will go up. That is one of the important. This is really important. This is really important confirmation of your trading idea. My trading idea, as you know, is to buy Pfizer, and I'm sure that it will go up 1 month, 2, 3 months until the end of year. I see it more, maybe 48, 50 on $50 in a few months. Okay, that's it. That is a negative divergence. Okay, the next indicator is called Stochastic Oscillator. Stochastic Oscillator is a momentum indicator that shows where the current closing price is located relative to the price range over a defined time period. It consists of two lines, K line, D line. K line is faster, D line is slower, which is usually, D line is usually a moving average of K line. The relationship between these two lines helps traders identify momentum shifts, potential trend reversals, and overbought, oversold conditions, similar like RSI. So somebody likes RSI more than stochastic, somebody will like stochastic more than RSI, but you will choose. You will try one, try other one, try MACD, try moving average, and you will make your own trade style. Okay. D line is a 3-period simple moving average of the K line. It serves as the primary signal for line for potential trade entries and is typically displayed as a dashed line on the chart. Okay, moves on scale from 0 to 100. Above 80 or even 90 suggests that the uptrend may be near exhaustion. Exhaustion, what I don't know how to say. Market is overbought. Let's say when it is with RSI, we had 30 and 70. Below 30 is oversold. Above 70 is overbought. With stochastic oscillator, we have 20 and 80. The same measures. You can see like this. This is USD Canadian dollar, okay, and this is stochastic oscillator. This is level 80, 20. Every time when stochastic goes below 20, it is a potential place to buy. And these two lines, K and D, must cross each other. The same thing is with overbought. Okay, let's try. Here we have this. Okay, down we have this crossing. Okay, up we have this. As you can see, it is working. Here crossing, it goes up. But as I told you already, you don't make your trades based on indicators. Never. Indicator is only the confirmation of your idea. Okay, let's go further. Yes, there is a negative divergence on stochastic too. It works like this: when K or D fall below a certain level, typically 30, and then cross 20, and then cross back above it, this suggests a potential bullish reversal. Okay, sell signal. Okay, and this is negative divergence here on, as you can see, price is going up. This is IBM. This is, sorry about this old chart. This is from our old script. It was made in 2004, 5, something like that. And this, I have to change this, but it is okay. Price is going up. And as you can see, Stochastic is going down and crosses, as you can see. Okay, the next indicator is MACD. MAC indicator, that means moving average convergence divergence. Indicator is widely used in practice and is known for its simple calculation method and reliable signals. It is commonly applied on weekly and monthly charts for long-term trading, but it can also be effectively used on intraday charts for short-term strategies. Traders rely on MACD to identify momentum shifts, trend direction, and potential entry or exit points. MACD indicator is based on moving averages of price data. The standard settings for MACD are 12, 26, and 9. MACD is typically displayed in two forms, as lines, as histogram. You will see better on photo. This is the calculation of MACD. You can search that on Google. Doesn't matter. Doesn't matter. Doesn't matter. What is matter is this. This is, as you can see, okay. As you can see, this is the price. This is sell position. Why? Histogram is switching on the other side, as you can see, and moving averages are crossing. When they are crossing above the line, it is time for sell. When they are crossing below the line, it is time for buy. And you are waiting for two signals. So one signal is for histogram to turn switch side, and other signal is for moving averages to cross. As you can see, buy, sell, buy, sell, buy, sell, buy. And we will talk about this Japanese candlestick charts, hammer, sorry. We'll talk about it later. It is very interesting. Okay. Okay, that's it. Yes, there is convergence and divergence in the MACD lower lows, higher lows. As you can see, it is similar like RSI and stochastic. Thank you. We finished indicators. The next part of our script are Japanese candlestick charts. After that, we will talk about Elliott waves and Fibonacci retracements. After that, we will talk about harmonic patterns. And when we finish that, we will talk about risk management and some for technical things, how to open an account, how to, I don't know, install the platform, how to buy, how to sell, and we can trade together then. Thank you very much.